Are we seeing genuine signs of a price pickup in oil prices? And is there any deal flow? Let's talk more with Ian Angell, CEO and founder of Tamarind Energy, joining us right here on Investor Insights. So oil prices, a lot of chatter that we're seeing some bounce, but then again, others say it's a dead cat bounce. How do you read what's going on out there?
Well, we're not in the oil price prediction business, but what I think is happening is I don't see it rebounding anytime soon. Our assumption is that it won't. Whether this is $2, $5, it's certainly not going to get back to 70, 80, 90 in any time soon. And the reason for that is one of the things that's happening in North America is the supply can come on so fast these days. And it used to be in this part of the world, in Southeast Asia, it takes 3 to 5 years to bring on a new oil field. If you're in Montana or Alberta or the Eagle Ford in Texas today, you can bring on a new oil field in 6 months.
Is that technology? Or what's making that change?
I think it's technology. It's 3 things, really. Technology for sure, that people know how to almost manufacture these oil wells now. The second thing that's happening, though, is that there's much more access to credit. One of the big dynamics in this oil price fall, which most other oil price fluctuations haven't had, is credit. Our sector now has a vastly disproportionate share of the high-yield bond market. So if you took oil against the overall economy versus high-yield debt against the overall high-yield debt market, oil has a very large share of the overall credit right now. And as a result, when the price came down, a lot of that credit started running for the exit. So liquidity is also driving the price down. So as soon as people think, well, I can make money, whether it's $40 in the Eagle Ford, as soon as the price goes to 41 or 45, they turn the credit tap back on and they bring that well on in 6 months and we'll have supply again. So I don't see the price bouncing back that soon.
So is there any sign or any chance that some of these bond investors might return to the market, especially if oil prices rebound to $60 or $70? Is there a Goldilocks price point in your view?
No, I don't think we see a magic price point. The great thing about the oil industry is it's a very dynamic industry. You have some oil fields that people can still produce for $20 a barrel. But you have some great, huge projects, like some of the oil sands in Canada, that require $70, $80, $90 to make money.
Is there any deal flow? I mean, after all, you are backed by Blackstone, armed with about $800 million worth of credit. Are you starting to pick up assets here and there?
Well, I always use the comparison. It's like in Singapore, when the housing market softens, what happens is actually nobody sells anything. And everybody says, well, the housing prices have gone down. Actually, they haven't gotten down because nobody sells.
Yeah, I know.
And our business is the same. So what we've noticed the last, since October, there's really been very, very little deal flow. Now, that said, I think what you're finding is a normalization. I think people are coming to grips with a lower oil price environment. Now, have they settled on 50? Probably not. But are they accepting 60, 70 as the norm? I would think so.
So when do you actually see the Singapore real estate market-like situation actually improving?
I think it'll take a little while yet till we start to see liquidity return to the deal side of the business. One of the things that we do see happening, though, is I think you'll see more corporate transaction. The value of shares in publicly traded oil and gas companies have got hammered.
Right.
And so the underlying assets are still good, but the share price is lower. And it's not just because of debt. In this part of the world, we don't see a lot of the companies having that much debt, but the share prices are still getting hammered down. So I think you will see share price-based consolidation or opportunities to acquire public companies and get some great assets underneath.
Okay, well, thank you very much. We really appreciate your thoughts and wish you all the best.
Thank you very much.